Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 12th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Not so much across the pond, but here in the United States, we got PPI, which is our producer price index, and that came in at negative 0.1%, expected to be a positive 0.2%. Remember, producer price index is a gauge as to how much manufacturers are having to pay for those goods that they bring in for the manufacturing process. That being said, when those prices increase, we are expecting that to be passed on to the consumer in the consumer price index. But we are not seeing these inflationary numbers, which I fully expected to see with all the tariffs and everything else, that we'd start seeing these producer price start to climb a little bit, and we're really just not seeing that show up. Therefore, we aren't going to see any higher consumer price indexes. If the manufacturer is not having to pass on higher prices, they don't have to raise rates, therefore, or raise prices, and the consumer is better off for that. And then we got the core PPI came in at negative 1%, expected to be a positive 0.2% also. And excuse me. Finally, we got crude oil inventories, and it was a drawdown of 5.3 million barrels, expected to be a drawdown of 1.3 million barrels. Now, we've talked about this last week about when we start to see these drawdowns. Is it just due to the manufacturing and the distillate process making gasoline, distillates, and other byproducts of that gasoline make it look like inventories are drawing down? Well, we did not see massive builds like we have seen in the past. With this drawdown of 5.3 million barrels, we saw a build of 1.2 million barrels in crude oil. Distillates did increase by 6 million barrels, and so I guess, you know what, at the end of the day, I didn't really notice that distillates number beforehand. So that's a pretty darn big build on distillates that goes into like making plastics and things of that nature. So big drawdown, but massive builds, especially on that distillates. I didn't think we saw that. Might changed my complete narrative as we were speaking, thinking that was a good catalyst to push crude oil above 70, but with those builds at other places, I think it might start coming off as the market starts to discern what's really going on there. So crude oil higher today, up in the 70 handle, pushing up against the 68 Fibonacci. I don't think it's going to break through that just based on those refining numbers. Gold futures back above the 1200 mark. It did settle above there, so that was a huge win for the bulls. Now we're back above the we're back above the 9-day moving average. That is a short-term bullish indication. So that being said, I think we'll probably go up and test this 38 Fibonacci if it can get any more legs, and I think that we might see some push for gold now that it's settled above that 1200. One thing to know with Bitcoin, nothing to see here. As we've been seeing this whole story play out for a while now, it's just really starting to flatline, it feels like, where the EKG is not registering anything. Also, something to be said, we're seeing mainstream media get away from those narratives on cyber coins, if you will, for lack of a better term, Bitcoin, and talking about pot stocks. So it looks like the narrative switched. There's a lot of lost interest here. It's just not going anywhere, so there's nothing to talk about in Bitcoin or on media, it seems like. Bonds taking back a little bit of yesterday's pullback. Good economic data. One would expect the interest rates to continue to rise, but we're not seeing inflation, so that mandate is a little bit in flux, if you will, as to whether or not they really need to raise interest rates right now for the overall economy or for their own balance sheet. But right now we're moving a little bit higher. Later on today, we do have a Fed governor speaking. I think it was it Bostic, I believe, that was speaking later on today. Bernard is speaking later on today. So he might give a little bit of push. Oh, and another thing to note, later on today, we also get the Beige Book. Now, that's a really important economic data point. It doesn't show up on the charts very often, but knowing I come from the Fed Fund Futures, this is a study that the FOMC will be looking at. They also get one that is not published to us, that's like the Blue Book or something like that, and one other one. But they are very similar to the Beige Book, albeit those are released much closer to when they make their decisions. But this will give us a good indication as to some of the data points that they're going to be looking at. So keep your eyes out for Beige Book. It's kind of brushed under the rug, but it is an important one. VIX is holding on to that teen handle, the 13s. Moving a little bit higher today, despite the fact that we were seeing equities move higher. This being at high in equities, a lot of people start putting on protection. We got the Dow Jones Industrial Average up 70 points, albeit it has given back a lot of its upward upside. We're probably right in the middle of the range for the most part, but above the value area high. That is going to be a short-term win for the overall bulls. It's lining up. We're creating a volume node here, which is starting to generate time and volume, which means people are starting to accept price at these levels. All right, so good thing if you are a bull when you start seeing price levels accepted at higher levels. That is very bullish. Now the NASDAQ in negative territory, giving back almost half, if not more than half of yesterday's gains. Most of this due to like the FANGs and stuff like that. Apple's having a bad day as well. The tech sector not doing so great. But we are above the 61 Fibonacci as of right now. Again, volume node being generated right at these levels, right at the 61 Fibonacci level. That is gaining price and acceptance at a higher level. That is bullish for the overall markets. As you can see here, settle above the 61 would be a big win for the bulls. E-mini S&Ps coming off a little bit as we really were rallying, came up against that 9-day moving average and have since started coming off a little bit as the overall euphoria of the good economic data coming off a little bit. We look at overnight inventory. You know, it's kind of hard to say. It looks like they tried to flush out overnight inventory longs coming into the day session, made it to those new lows. Saw pretty decent economic data. You know, I'm not a fan of having higher prices. It does show demand, but at the end of the day, a B type economy, where not an A plus economy, but a B and C economy, I think is what we really need right now, just to trudge along and move higher as we go. Anything bubblicious is probably not good right now. But as you can see right off the open, the good economic data, we've screamed higher, made new highs intraday, and now have started coming off and mid-market for the most part. All right. But in this move, Apple, remember I just took off my short deltas. Well, I decided with the high implied volatility, when I took those short deltas, remember I got long puts by getting short deltas. That was in really low implied volatility. That's when we start setting up our buying debit spreads and things of that nature. Now we have high implied volatility in Apple, so I decided to switch up my directional assumption and move it to the upside with this bit of a pullback today, given me that opportunity to do that. So I went into Apple and sold some puts in there, and I sold the October 200 puts for $1.09. And the reason why I did that is very close to this Fibonacci extension right here, the Fibonacci extension. That dollar gets me, with those 200 puts, I'm below here. That extra dollar gets me even further. So I have a nice little support area. I was looking at the 105 puts, which is right around that 16 delta, which is usually my mandate for buying these, selling premium strategies here. But that 200 was calling me out. It's only the 11 delta, and I got $1 for it. It gets me below a psychological level of 200. I'm also well below then that 100 Fibonacci extension level. a couple of good things going for me there. Obviously the point of control is well down here, not a whole lot of volume and time spent up here. That is a bad thing for me, if you will. If you are a bear, that's probably what they are looking for, wanting to come back down to around these levels, maybe even cover this gap here. I'm not looking for that to happen right now, or at least in the next several days. So I'm going to play this a little bit to the upside. So at least for the short term, hopefully get some volatility, contraction, movement to the upside, directional assumption being right. I'll be able to get out of this trade rather quickly. And that's about it for today. Tomorrow's webinar is going to be on the long calls, but I'm going to be really digging into volatility in and around this. So yeah, I understand you can figure out how to do a long call, but I'm going to be talking about strike location, environment, and what type of stocks should we be doing this around. All of those things are paramount in creating a successful trade going forward. All right. The one thing we can do is manage our risk and set these up properly at the onset. Everything else after that, we have to be mechanical. All right. So check that out tomorrow. Go to protraderstrategies.com, sign up for that. And if you can't take that, take it easy.